Welcome friends. In this video, we will see if Swftcoin can do 10x. Don't forget to subscribe and leave a like and watch to the end so you don't miss it. When we look at the chart, it is possible to see the presence of a clear downtrend. The price has repeatedly touched this falling trend line and retreated each time it touched it, facing selling pressure. However, we are now observing that the price is approaching this trend line again. From a technical analysis point of view, a break of this trend line indicates that the current selling pressure has subsided and the market is preparing to set a new direction. Breaking such downtrends usually boosts investors' confidence and attracts more buyers to the market. If the price manages to break through this falling trend line, it is quite possible that a strong bullish move will begin. This is because such trend breaks give important signals that the market is changing direction. Buyers gain more confidence in the market when they see price action above the trend line, which increases buying volume and causes the price to accelerate upwards. Especially when an asset that has been in a downtrend for a long time breaks the trend, it signals that the uptrend could be strong and steady. With a break of this trend, the price can be expected to first move towards the levels that had previously shown resistance. Afterwards, the uptrend could accelerate further as buyers enter the market more strongly. Therefore, a break of the trend line could open up significant opportunities for investors. A trend reversal signal, especially in a market that has been falling for a long time, may cause investors to take bolder steps and allow the price to reach new highs. To summarize, this falling trend line that the price is currently approaching is a critical threshold for the market. If the price manages to break this trend, it is highly likely that a new uptrend will start. And once this trend is broken, the price will be even closer to making 10x. But we can't just judge this by the falling trend. Let's look at other metrics. At this point, it is worth noting that a break of the falling trend line will have a huge impact not only in terms of price action, but also psychologically. Traders often take a break of a strong trend line as a buying opportunity, which can cause the price to rise rapidly. Especially in technical analysis, a break of a line that has been tested for a long time and acts as resistance often initiates a trend reversal and opens the door to a new bull market. Looking at the overall structure of the market, we see a very noticeable bull pattern here. This pattern usually represents a rebound move after a prolonged decline and indicates that the price has the potential to re-enter an uptrend. The formation of bull patterns is a very important signal for traders, as such structures usually indicate that the market has changed direction and is preparing for a strong bullish move. Currently, we can see that the price is positioned at the bottom of the dish. This means that it is quite possible that an upward movement could start from here. In technical analysis, the target of a bull pattern is measured by the depth of the bull. In other words, if the price travels the same distance upwards from the bottom of the bull, the pattern is complete and the target is reached. Dish patterns offer a very important opportunity for traders, especially when they occur at the bottom. This is because a bullish breakout from the bottom is usually supported by solid buying pressure, which allows the price to move steadily upwards. Increased volume during this period can further reinforce the strength of the bullish move and increase the probability of a successful completion of the pattern. The fact that the price is currently at the bottom of the bull marks a critical stage for investors. This is because these are usually the areas where big investors enter the market and increase their purchases. If an upward movement starts from here, it is quite likely that the price will quickly move towards the top of the dish. Due to the nature of dish patterns, when the price moves up, it usually encounters resistance at first. But once these resistance levels are overcome, a strong uptrend is expected to begin. Especially if there is an increase in volume during the completion of the pattern, the probability of the price reaching the target zone is much higher. Since dish patterns are usually formed at the lows of the market, it is important for traders to be patient and watch the price action carefully. If the pattern is successfully completed, this will be important evidence that the market has entered an uptrend and the price is expected to move up by the depth of the dish. As a result, we see that there is a strong bull pattern here, and we observe that the price is currently positioned at the bottom of the bull. This could be a critical point of opportunity for traders. If the price makes an upside breakout from here, it is possible that there could be a rise as deep as the depth of the bull. If the pattern is completed, there is a great possibility that the price will enter a new uptrend and continue its upward movement. And the target is about 10x. But we need to look at one more thing, and we will look at it in the video. We can see that there is a very critical bullish order block just below the price. This area has worked as support and resistance many times in the past, and each time prices come here, it has been met with strong buying reactions. Currently, the price is approaching this bullish order block, and if a downside move continues, there is a good chance that a reaction from here is likely. Looking at the past movements, every time the price has come to this area, it has faced strong buying pressure and made upward reversals. This shows that market participants see this area as an important support point and are intensifying their buy orders here. If the price reaches this zone once again, it is quite possible that we will see a strong reaction as in the previous examples. Also, the operation of order blocks is often directly related to the actions of market makers. Large traders and trading algorithms determine the direction of the market by increasing liquidity in these zones. If the price receives enough buying interest when it reaches here, a sharp rebound to the upside can be expected. Otherwise, we may see a move to lower levels as the liquidity in this area is consumed. However, based on historical data, this area has pushed the price up many times so far and works as a strong support point. Bullish order blocks are often one of the key areas that allow the market to make an upward reversal. Since there is a large amount of buy orders in these areas, the price usually bounces up strongly when it comes here. It may want to take support from this area and break the downtrend, and we can see that there is a very important bearish order block at the top. This area has worked as a strong point of resistance in the past, limiting the price's upside movements and experiencing pullbacks. In technical analysis, order blocks are known as areas where large traders concentrate their sell orders and the price often struggles. Bearish order blocks are one of the areas where selling pressure is intense and price struggles. Once the price reaches this point, it may experience some retracement as it has in the past. But what we often see in the market is that the more the price tests a resistance level, the more likely it is to break it. This is because each contact exhausts and weakens the sell orders in this zone. If the price reaches this area again and the upward pressure continues with a strong increase in volume, it is quite possible that the breakout will occur and the uptrend will gain momentum. The price may make a correction here on its way to 10 cents, but it will surely continue on its way. When we analyze price movements according to the Elliott wave theory, we can clearly see that the first and second waves have been completed. Currently, the market seems to be in the process of creating the conditions for the third wave to begin. In technical analysis, the third wave is usually known as the strongest and longest lasting wave. If the market follows this theory, we could see a strong rally with the start of the third wave. The yellow and green lines set as targets are the minimum arrival points of the third wave. Within the Elliott wave structures, the third wave is considered to be the strongest and decisive wave of the trend. It is usually longer than the first wave and creates a great momentum in the market. Looking at the current price action, the fact that the second wave has completed its retracement suggests that the third wave is laying the groundwork for the third wave to begin. If the third wave works as we expect, we can expect the price to rise rapidly as strong buyers come into play. The yellow line will be the first target point for this rise, but if this area is breached, it is likely that the price will continue to rise up to the green line. For traders, the start of the third wave can be a great opportunity, as this wave is often considered one of the most profitable moves. While in the first and second waves the market experienced certain corrections, the third wave is more decisive and proceeds with a strong bullish movement. However, the yellow and green lines, the targets of the third wave, should be followed as critical points. The yellow line can work as the price's first stop and resistance point. If the price breaks this level strongly, the movement is expected to gain further momentum and move towards the green line. Since the third wave is usually one of the most interesting for traders, we are likely to see a significant increase in volume and a significant rise in momentum. And so whoever buys at this price can make 10x, but patience is very important here, because the price will not go there immediately. Yes, friends, this is how it was in our video. If you like it, don't forget to like and subscribe.